Joining me right now to talk more about that is the U.S. chairman of PwC. He is senior partner at PwC, Tim Ryan. Tim, it's good to have you this morning.
Good to be here.
Thank you so much for joining us. Is that what you're seeing? You speak with, what, 400 CEOs a year all the time, right?
Right.
And are you getting that kind of sentiment from them?
I would tell you, Maria, without a doubt, our sentiment of the economy is CEOs feel very good. Their confidence level is up. It's highly competitive, but CEOs feel good about their ability to compete. They're investing in digital transformation. They're focusing on lowering their costs, and they're geared up to compete with each other.
Yeah, it's interesting, the digital transformation I want to get into, because I know that you're working on this upskilling of 55,000 employees. But first, let me stay on CEOs for a moment, because there are some debates going on. J.P. Morgan is out with a report today saying, oh, we're going to see a recession in the next 2 years. There's some expectations that interest rates cuts into the growth. Do you have a vision out beyond 2 years? What are you seeing beyond the next couple of years?
Well, let me be clear. When we look at the next 2 years, it's hard for us to see that where that bump is, because the reality is we look at the growth expectations that our clients have, and they feel very good about that. What they're building into their business is resiliency. They don't know what's going to happen after 2 years, and that's what we're hearing from them, but they're building resiliency and contingency plans into their business model, so whatever happens, they're ready to do it. So that means they're leaner, they're meaner, they're more efficient than they've been before. So if it does turn 2-3 years out, they'll still be able to deliver the right returns to shareholders.
That's wonderful, and that's why we're seeing an unemployment rate where we are. They're hiring people as well. Now, part of the boost for business as well as individuals was the tax cut plan.
Yep.
So what kind of a runway does that tax cut plan give us? The impact of the tax cuts going forward.
So when you look at the tax cuts, what I'll say in 2018, 2019, we're seeing the benefit in share buybacks, we're seeing in M&A, dividends, and to some employees, and those are all really good. The other thing that we're starting to see, because the competition is so intense for that consumer dollar, we're starting to see some of it creep into pricing, benefit the consumer, benefit pricing, but it is putting pressure on companies to deliver that back to shareholders. So said differently, there's a lot of companies fighting for market share, and that's benefiting the consumer at the end of the day.
So, okay, because we were worried that the tariffs part of the story was going to push prices higher and hurt consumers. You haven't seen that.
You've got two counterbalancing things. You have potential detriment to consumers in the tariffs, but you've got the benefits of tax reform actually helping consumers. So we've seen nothing but benefit for consumers at this point.
I really like the idea that this tax cut plan has a bit of a runway, that we actually haven't seen the whole impact yet.
Yeah, without a doubt, because you think about it.
It's only the first year, by the way.
Companies are investing in M&A, they're investing in employees, and they're passing it to consumers. Those don't go away in 2018. The benefits of M&A will benefit in 2019, 2020, and beyond.
Now, a minute ago, you said some of the issues that CEOs are thinking about. They're thinking about M&A. They're thinking about digitizing. Tell me about that, because this is a real change in their business model that they have to adapt to, this new digitizing of the U.S. economy.
Almost every CEO, regardless of industry, they are focused on three fundamental things: lowering the costs, digitizing their offerings, and adding more value. And it is the digitization at scale. Everybody knows what they need to do, but the challenge is how do you do it over 10, 20, 30, 40,000 employees at scale? And that's where CEOs are really spending their time, is making that happen.
How do you do that? I know PwC has a big commitment to digitally transforming the workforce. This is an important issue for you because it's an important issue for your clients, right? So how do you do that? What's entailed?
First thing is investment does cost money. So at PwC, we have 55,000 people here in the U.S. We have embarked on a program called Your Tomorrow, where we are raising the bar for everybody. We're investing in our employees to raise their digital skills. All 55,000 of our people earn a digital acumen badge. They learn coding, they learn data analytics, they learn Alteryx, they earn Tableau. So
that's very valuable.
Without a doubt, you're giving them skills that not only help PwC, but more importantly, it helps our people and it helps our clients. And that's what we're seeing leading businesses do, and that's where some of the benefits of tax reform are going.
So where is the growth then in that business? I mean, the digitizing of the economy. Go through some of the industries that are really seeing this mostly, because there are some employees out there who say, you know what? What does a steel worker know about digitizing? You know, what does a truck driver know about digitizing? These are all new things that employees who've been in the workforce for a long time have to learn.
That's without a doubt. So think about it in two steps. The first step is just by teaching employees, regardless of industry, whether it be retail, whether it be trucking, professional services, by teaching people new skills, they can do their existing job more efficiently, more effectively. That frees them up to do other things. And then as they learn those skills, they get access to data. The data then allows for a different value proposition to the customer at the end of the day.
Because every industry needs to adapt to this.
Without a doubt. I mean, as someone said to us recently, if you're not digitizing at scale, you're not going to survive.
Yeah.
And at the end of the day, that comes down to the quality of management. Is management leading a digitization effort that will allow the company to be more competitive going forward?
And are there new people that are coming in, new jobs that, where are we finding the people who have these skills? So if you're not going to train them yourself, you have to train them yourself.
You have to, because when you look at in 2020, there'll be over 1 million jobs. There'll be over 1 million more open jobs than we have people to fill them.
And we already have like 7 million open jobs.
Without a doubt. So the reality is, if we don't teach our own people these skill sets, we're not going to survive. And if you're a CEO looking beyond 2 years, the focus that we're seeing companies is invest in your own employees, teach them to do it, and that'll make sure you're viable in the long term.
So digitization is different than AI, different than machine learning. This is also a factor.
Without a doubt. So when we say digitization, we're talking about data analytics. We're talking about AI, machine-based learning, natural language processing, and by teaching employees those skills, they can deliver more value to their customers at the end of the day.